as predicated. Treasury Cabinet Secretary Ukur Yatani walked a thin line to deliver the 3.6 trillion shillings budget. A balance of winners and losers. The CS outlined a raft of tax exemptions, waiver extensions, as well as new import levies that he said would serve to protect local economy. Faisal Ahmed has the details.
3.2 billion allocation in the financial year 2020-21. A clear testimony of the...
During his 2-hour speech at the National Assembly, National Treasury Cabinet Secretary Ukur Yatani kept a straight face as he delivered the largest budget in Kenya's history at 3.6 trillion shillings. But in his balancing act to deliver the revenue needed to finance the budget and keep Kenyans' hope alive, the CS went easy on usual taxation that have become synonymous with every budget day statement. In his delivery, Yatani's bag of goodies went to, among others, baby diaper manufacturers whose production inputs were zero-rated. Also smiling through the budget are employers engaging TVET graduates who will now qualify for tax rebates. The National Hospital Insurance Fund was also a winner with a proposal to ensure that it qualifies for the insurance relief. Importers of glass have also been handed a boost with the removal of excise duty. Other winners include those dealing in equipment for generation of solar and wind energy and will now be exempt from VAT as the government moves towards production of clean energy.
Mr. Speaker, the Income Tax Act provides for a tax rebate to employers who offer internship to a minimum of 10 university graduates for a period of 1 year. These employers are allowed to deduct from their taxable income an extra 50% out of the cost of their apprenticeship emolument. In order to encourage employers to provide similar opportunities for TVET graduates, I propose an amendment to the Income Tax Act to include graduates of TVET institutions under the program.
But it was not all smiles, especially for steel product importers who will now pay 25% import duty. Importers of leather and footwear products will also have to part with 25% import duty in a move aimed at protecting the local industry. Unassembled motorcycles will also attract 10% duty in the coming financial year. On the other hand, imported furniture will also attract 35% import duty, a move aimed at growing local manufacturing. The bulk purchase of internet service, Yatani says, will also attract excise duty. Also set for higher taxation will be locally manufactured sugar confectionery and white chocolate that will be subjected to excise duty. This in addition to the betting industry that will continue to attract 20% excise duty on any amounts booked by fans.
These amendments are contained in the Finance Bill 2021 that I submitted to this House in April 2021 for consideration and approval. Mr. Speaker, the custom measures agreed by the East African Community Partner States and the proposed amendments in the Finance Bill 2021 are expected to generate an additional shilling 8.7 billion to the Exchequer for the financial year 2021-22 budget.
These tax measures the CS hopes will rake in some 210 billion shillings, critical in plugging the budget holes. In a year that has seen traditional revenue streams dry up for the government, the Cabinet Secretary says that the new tax measures are meant to help the economy bounce back. Faisal Ahmed, Citizen TV, Nairobi.